Hello everyone, welcome to my channel. My name is Benjamin, and for those of you who know me, I'm the Buffett investor. And so in today's episode, I'm actually going to share with all of you, some powerful tips that are shared by Warren Buffett in terms of how we can actually invest, safely and also sustainably in the stock market, right? So of course, I think the first one is always about, having a long-term mindset. So when we enter into the stock market, we always want to have a very long-term time horizon. It's always with the mentality of buying and holding. Of course, we want to hang on to fundamentally good stocks as well, right, in a portfolio, and we have to review them every year. So of course, if over the years, let's say if there's happened, for some sudden reason or things like that, there is a change in the fundamental of the business, then we also need to reevaluate. But if not, then actually buying and holding onto the strong stock is actually a good way to do that as well, right? Next is also in terms of how we can actually invest into the stock market without any emotions. I've shared in a lot of my videos is that we always want to make use of the fundamental numbers, look into the balance sheet, the income statement, things like that. Look into the financial indicators, which you can actually get all these numbers off, like Morningstar.com or even like Yahoo Finance, and you can always tap onto these numbers to give yourself a more, I would say, a safety net, give yourself a more stability in terms of the companies that you're choosing, because we can always trust the numbers will not lie, right? But of course, we don't want to just base on hearsays or market emotions, right? That's very important. Of course, then the next one actually talks about our circle of competence. We have Warren Buffett talks about this, is that for him, he wants to invest into companies that even, in his own words, he said that even idiots can even run the companies, because, he want to make sure that the business is easy to understand and things like that. And even if there's any, changes in the market, a change of government or anything like that, if the business is easy to understand, then most likely it will be able to sustain over the long run. Example, I think Warren Buffett, he buys into example like airline companies, example, and then he buys into chewing gums, right? And Coca-Cola, things that are like very, I would say it's sustainable, and it's very recession resilient proof, right? So these are some of the things you can look at. So always remember to invest within your circle of competence. And of course, for some of you, if you are into technology companies, you understand how technology works, then of course, it might be a plus for you to go and you can invest into like the Amazons, the Facebook and Apple and things like that, right? Okay, and then of course in the next tip also we're going to share is in terms of how we can actually look at business and trying to assess their I would say their earning power. And one of that is actually looking at the return on the invested capital, which I shared I think in some of my earlier videos, right? This is what Warren Buffett will take a look at. So of course, if you're a company that maybe perhaps they give out some dividends, versus one that actually another company that has a much higher return on invested capital, I'll always go for the latter, which is in terms of the company that can deliver higher efficiency in terms of the capital that's being invested in them. It means that they're able to churn and run the money more efficiently, be it in their products and services, in terms of their investing to the right technologies and innovation, right? So these are just some things to take note of, right? And just now we have also shared is that in terms of diversification as well, I know of you might be worried, in terms of, hey, Benjamin, should I actually invest into, like 100 stocks, or should I buy into a basket? Again, I mean, when it comes to investing, I always like to propose, that it's always on a spectrum, and it's depending on your level of competence, how you understand the stock market and things like that, and also in terms of your risk appetite and also the time horizon. So, of course, for some of you who want to adopt a passive investing method, then you can always adopt an index investing, buy into a exchange traded fund, ETF, into a broad market index, right? So that's one way. Of course, as you go up, in terms of the level of competence, where Warren Buffett, he actually deploys his strategies, more of a concentrated portfolio, as I've shared also in my book. I wrote a Buffett on Fire book as well. I talk about diversification, and in fact, for myself personally, I would recommend, to actually keep it to almost 10 stocks, because really, if you can identify the strong fundamental top 10 stocks in your portfolio, right, whenever you have additional funds, you will then question why should you actually be investing into the 11 stock when you can actually redeploy back into the 10 stocks that's really in your bench strength, right? Your current portfolio pool, and then that can actually generate for you much higher returns, right? So of course, these are just some of the wonderful tips that I've actually gathered along, learning from Warren Buffett, and of course from the many books, and even learning from all his videos and things like that. So I hope you find this video useful. If you like it, do actually comment below on my video, share and like, as well as subscribe to my channel. Click on the bell notification button so that you can get the latest updates. And I'll see you in the next video. See you soon.